Now we're looking at published accounts. Now this is from the 2005 paper. The reason I've chosen this paper is there's one or two adjustments that we haven't come across before, which could come into a question one as well. Gale Limited has authorised capital of 800,000 divided into 600,000 ordinary shares at €1 each and 200,000 9% preference shares. That becomes important when we're looking at dividends. So there's the original trial balance. Right, so if you wanted to take a photograph of that, that's fine. Now, let's have a look then at the adjustments. The following information is relevant. So stock, opening stock is 96,000. So what's the adjustment for the opening stock? So the adjustment for the opening stock is as per normal. Debit closing stock in the balance sheet, credit closing stock in the trading account, or in this case it'll be the P&L. You'll see it when we do the workings. The second adjustment now, the patent. A patent was acquired on the 1st of the 1st 2000 for 80,000 and is being amortised over 8 years in equal instalments. So 80,000 over 8 years, so 80,000 divided by 8 gives you 10,000 per annum. And this amortisation is to be included in cost of sales. So let's have a look at the adjustment now. It would be debit patent write-off in the trading account, 10,000. Credit patent in the balance sheet, 10,000. Remember lads, we're just doing what we're being told. The next one now you probably haven't come across before. It's a little bit difficult, but it's very sweet if you can master it. On the 1st of the 7th 2004, the ordinary shareholders received an interim dividend of 15,000 and the preference shareholders received 9,000. So if you look at your trial balance, you'll see interim dividends 24,000. It's on the debit side because it's a cost. Now the directors proposed the payment of the preference dividend due and a final dividend on ordinary shares to bring the total dividend up to 7 cents a share. Now let's have a look. We'll have a look at the workings first of all. So if you do up a little chart, preference dividend, ordinary dividend is equal to total dividend. Interim dividend is 9,000, ordinary dividend is 15,000, and your total interim dividend is now 24,000. Put in your final, but leave it blank, and then we'll fill in the figures. And then put in your total, and leave it blank, and we'll fill in the figures. So we're having to work a bit backwards now. The preference share capital at 200,000, at 9% is 18,000 for the total year. So under preference dividend, and put beside total, 18,000. So it's 18,000 for the year minus the interim of 9,000 gives you a final dividend of 9,000, a final preference share dividend. Okay, now we approach the ordinary share capital the exact same way. We have 400,000 ordinary shares and it says the total dividend for the year is 7 cents. So that gives us 28,000. So put 28,000 into the total ordinary dividend column. Minus the 15,000 gives you a final ordinary dividend of 13,000. So therefore our total dividend due will be 22,000. Now that's a small bit of work. It's not that difficult. So let's have a look at the adjustment then. Debit preference dividend proposed in the P&L 9,000. Debit ordinary dividend proposed in the P&L 13,000 and credit dividends due 22,000 in the balance sheet. Okay, let's move on to the next adjustment. So we're now looking at number 4. Now there's a number of adjustments here. Provide for debenture interest, investment income, auditors' fees, directors' fees, and corporations tax. When we've that done, when we've this done, then we'll stop. So let's have a look at the debenture interest. So my debentures are 200,000 at 8%. So the debenture interest for the year is 16,000. That's going to end up in the P&L. Minus debenture interest paid 12,000. That's already on the debit side of the original trial balance to be accounted for 4,000. So what's the adjustment? Debit debenture interest in the P&L 4,000, credit debenture interest in the balance sheet, or debenture interest due in the balance sheet 4,000. Now we go and we have a look at the investment income. Investments are 240,000 at 9%, which is 21,600, minus already accounted for in the trial balance 10,000 to be accounted for 11,600. Now the debenture interest is a gain. So here's the adjustment. Investment income is a gain. Credit investment income in the P&L 11,600. Debit investment income due in the balance sheet 11,600. Now it tells us then for audit fees, so investment income is a gain. Now we're looking at audit fees, directors' fees, and taxes. These are all cost. Debit auditors' fees 9,500 in the P&L. Credit auditors' fees due 9,500 in the balance sheet. Debit directors' fees 50,000 in the P&L. Credit directors' fees due 50,000 in the balance sheet. And then, apologies about the writing here. Debit corporation tax in the P&L 87,000. Credit corporations tax due 87,000 in the balance sheet. Now stop there. If you can understand that much, we've done good work.